Okay, we're recording. And so without further ado, I would like to have Dami and RL take the stage.
Thank you, Stuart. Dami, you up and running?
Yep, I'm ready.
Okay. Well, I'll introduce myself. I am RL Condra. I am the Senior Vice President for Government Relations for the National Cooperative Bank. Years ago, I'm a former Senate staffer for the Senate Agriculture Committee that oversaw the USDA rural development programs, and I've done congressional affairs for around close to 20 years now. I moved from the Hill to the National Cooperative Business Association. That's where I met Stuart, and that's where I started learning more about cooperatives. I have to admit, I've never heard of, before I joined NCBA, I've never heard of a co-op. Well, I've never heard of a food co-op before. I've heard of, well, actually, let me back up a little bit. I went to the University of Arkansas, and there's a very great food cooperative there, but I'd never stepped foot in there. So for 10 years, I've learned Ozark Natural Foods, this is the name. I have, for 10 years now, I've learned a lot about food co-ops and have become really a fighter for food co-ops to access capital through the Small Business Administration programs, and we'll talk more about that later. And so I'm just really glad to be here. Oh, now I'm with the this is my 8th year with the National Cooperative Bank, and I do government relations for the bank. So I am not a lender. I don't do lending. Dami is the lender, but I work hand in hand with people like Dami to figure out how we can make more loans to food co-ops. So I'll turn it over to Dami.
Thank you very much, RL. And good morning, good afternoon, everybody. Thank you, Stuart and Jacqueline, for having us here. It's nice to be here. I like talking about food co-ops. I like talking about financing or lending to food co-ops. But let me give you a little bit about a background about myself. So my name is Dami Odetola. I started with Ncb in 2008. Prior to that, I typically say I was on the dark side. I used to work with Bank of America and some of the other big banks. But my eyes opened, and a friend of mine said, hey, why don't you come to this little bank in DC? It's not what you're used to, but they do great stuff. So I came to Ncb in 2008, and I said, all right, I'll do a year with Ncb and then move on to other things. But I came to Ncb, and I'm still here 12 years after. It's either they like me or I like what I'm doing. I think it's a mix of both. Like RL said, I'm a lender. I lend on the East Coast. There are 3 of us. There's Brian Meisenhammer, who works on the in the Midwest. Brian is also on the board of the FCI. And there is Sylvia Benincourt. Sylvia works on the West Coast. And she is about 2 years at the bank. So having said that, I'm going to go on talk. I'm not going to assume everybody knows about Ncb. So I'm going to give a little bit of a background of who we are and what we do. So we lend to co-ops and like-minded, socially responsible organizations throughout the United States. We're organized under the National Consumer Co-op Bank Act of 1978. We're privatized in 1981 as a full financial services company. In 1988, I believe, we became a full service bank. Deposit taken with the purchase of a federal savings bank in Ohio. In 2014, we converted to a commercial charter bank, which means that we're now regulated by the Office of the Comptroller General. Today, we're owned by over 3,000 of our members. And we have assets in excess of 3 billion. And if we add what we manage for our investors, our assets are over $8 billion. Areas of focus include member-owned and member-driven organizations, community-owned housing co-ops, community-driven healthcare solutions, retail-owned grocers and consumer-owned food co-ops like food co-ops, small business co-ops, consumer-owned credit unions, and their service organizations and consumer-focused enterprises. We offer a bunch of products and services, including real estate loans, business term loans, lines of credit, SBA loans, cash management, deposits, and also we do residential mortgages, home equity lines of credit, and typical consumer banking. So since our inception, and as Stuart mentioned, we have always been an advocate and a strong supporter for the development of food co-ops. It's a huge line of business for us. We work with great organizations like the NCG, FCI. I mean, I always say when I talk to people, startups, I always ask them, who are you working with? Because we know a lot of people in the sector, and we go like, I hope you're working with the FCI, so that they're guiding you in what to do. So before we talk about a specific co-op or the structure, I would like RL to go into talking about the Main Street Act.
When I first started working on legislative issues for co-ops, I could name one member of Congress that supported consumer food worker type of co-ops. It was really the rural electrics had their supporters, the farm co-ops had their supporters, but no one really understood much about food and worker co-ops. That was 10 years ago, and it has just really exploded with the changes in our economy, the changes in politics and in our government, our country, the way our cultures have changed and looked at, that cooperatives have really exploded onto the mainstream, and especially in Congress. We have lots of now champions in that body. And an example of that is the Main Street Act was passed. And that was kind of putting the Small Business Administration on notice from Congress. They've written letters in the past and encouraged them to support co-ops. This legislation was able to outline some technical assistance and some measures within SBA, but the main takeaway was that it required a report from Congress or from SBA on how they will make loans to co-ops moving forward, and conversions, because there's a lot of businesses out there that there's interest in converting those businesses into worker co-ops. And so the leadership on that was Senator Gillibrand of New York, and many other members from the New York delegation and others. I think there were like over 10 co-sponsors of that bill in the Senate and many more in the House. And that was real standalone legislation that passed 2 years ago. So that was a really good feat for the cooperative industry. So thanks, Dami.
Thank you, RL. So I'm always torn between talking about the structure or the eligibility of SBA loans or the benefits first, but I think
Dami, I'm sorry to interrupt you.
No
Do you
problem.
you're going back into talking about the lending aspect of food, and then I'll talk about the history of SBA. Is that how we're doing this?
Yeah. I was just going to go over the eligibility first. What you need to consider to be eligible, and then the benefits of being having an SBA loan.
Okay.
So I'm going to start by talking about the general, eligibility of qualifying for the 7A or the 504, but mostly I'm going to talk about the 7A because that's what maybe 95% of co-ops would qualify for. So you have to first of all be the type of business that they provide guarantees for, which we prior to this period we were not, but now we are. We must meet the size eligibility. We can talk about that later on, but there's a size component to this. Then the term of the loan must be within their requirements. We must also be able to identify that there is no source of credit for the business or the co-op anywhere else. So you can't come to the SBA and say, hey, we want you to provide guarantees, but then later on the SBA finds out that you could have gotten that money from somewhere else. So we have to be able to demonstrate that there is no credit anywhere else. And it must not be a passive company, which means you have to be active. You have to be able to, you're in business. The loan must not be a refinance. It's not that where there's a loan here that there's, in short, it works with like the credit elsewhere. You already have credit and then SBA is coming in to refinance the loan. That is not eligible most of the time. Now, if it's an existing SBA loan, there are guidelines that we'll have to follow to be able to qualify for that. And then most importantly, there has to be guarantee from the owner or the owners. So RL, is this where you want to talk about
Sure.
the SBA background? Yep.
Sure. So if you're talking to our audience here, if you're trying to start up a restaurant or a small business, you would go to your bank, your local bank, your community bank, your credit union. You would do what you would do as an applicant, as a potential borrower. If they like what you're discussing, it's a startup business, a startup restaurant. They would use the SBA 7A loan program. So that way they're taking a risk on you, but they would go to the SBA and get a loan guarantee of your loan. And I think I can't remember the percentages, but I think it can go up to 80% or 75 or 80% of a loan guarantee for that bank. So let's say you had $1 million loan, it went bad, the bank would get at least 80% back of their risk. So what if you're a food cooperative? This is where it gets a little hairy. From the 1960s, the SBA had a specific regulation in place that specifically said consumer cooperatives, aka food cooperatives, were not eligible for SBA loan programs. And that was in place since the mid-60s. The cooperative industry sectors started working on changing this and making their pitch to the agency for decades. And for almost 40 years, 40 something years, this was in place. So no matter what, if you went to your bank or talked to SBA, they would say, oh, you're a food co-op. We don't do food co-op loans. They're ineligible. A lot of people worked on changing this, and including Stuart Reed here and many others, on talking to Congress, talking to SBA, and there's a success story here. I think 3, 4, 5 years ago, the regulation was changed by SBA. They removed that regulation. So technically at this time in 2021, food cooperatives are eligible for SBA loans, the loan guarantees. There's a catch, almost like a catch-22. There's a requirement at the agency that, and Dami kind of hinted at this, that if you get a 7A loan, that you have to provide a personal guarantee. Specifically, any owner of a business that owns over 20% of the business has to sign a personal guarantee. Well, we know that a food cooperative is made up of hundreds and thousands of members. No one owns more than 20% of a business, and there's really no one there to be able to sign a personal guarantee. This argument has been made to the agency and to Congress. The agency has come back and has always said, that's our rule. We're not budging. That's our rule. And you can make any kind of case. I'm talking myself here. You can make any kind of case you want to the agency. That's their statement. We have taken that answer and we have pushed back for many years. And I'm looking at my notes here. We found some middle ground here, some wiggle room. And we're going to talk about that a little bit later today, but an entity guarantee can be a part of that. But I just want everyone to know that we are constantly talking to Congress about this issue. I actually testified in front of the House of Representatives last year on this specific issue. And as everyone knows, COVID hit and our world changed. But now we've wrapped back up on our discussions with Congress, and these things are moving again, these conversations, and along with the agency. And we're also hoping that with a Biden administration, that there will be some more openness to talking about how to get access to capital to cooperatives. So I do want to talk about this later on today. If some of you, this is eventually, when you get to the point where you need a loan, you're going to need an Sba loan. So this is actually going to affect you, probably most of you. If you get to this point where you're going to need a loan, it's going to be difficult because of the Sba regs. And I'm happy to talk to you offline and online about how you can contact your member of Congress to let them know, because these discussions are really ramping up as we speak. And I'm trying to think, if I'm looking at my notes here, if I have forgotten anything about that. No, I think I'm okay. I think when we start talking about the entity guarantee later on, Dami, I think we can go back to some of this. So I'll pass it back to you.
RL, just a quick question
Sure.
there. If people on this call and beyond that, people that are working with FCI across the country want to get involved in advocating for change here, is there a place you can point them to get the information they need? Right, so they don't all have to call you, that is.
Right. How would you like to do it, Stuart? I know I have the information. I know Kate Latour at NCBA does as well. What do you suggest?
Put something together, we can get it out.
Okay.
Okay.
We can do that.
Great.
Thank you, RL. Before I talk about the co-op that we have been able to secure the funding for, I think we signed it January 17, 2020. I'm going to talk about the benefits of the SBA financing. Now, we all know that starting a co-op is tough. It's difficult. And if you're on this call, that means you're either advising, consulting for a co-op, or you're part of a co-op. So you know how difficult that is. So coming from the side of the bank, what we like to, we don't want to lose our depositors' money or our members' money. So what we want to know is, can we get repaid if anything happens? If the company goes south, if the co-op goes south, are we able to get the members' monies back? So that is why for startups and for a lot of these loans, the SBA guarantee is very, very good for us, because right now, to what RL alluded to, now they go up to 90% guarantee. So in short, if you need a loan for $1 million, 900,000 of that is guaranteed if we're able to put the structure together and the co-op qualifies. So, but for the co-ops or for the borrower, some of the benefits, and again, the list is not exhaustive, is flexible structures. You have a lower down payment compared to the traditional or conventional lending. The lower monthly payments, there are variable fixed rates that might be beneficial. The term of the loan can go from 5 to 25 years, depending on what we're financing. For SBA, the loan proceeds must be very specific. So what we're going to put the loan into, the proceeds into, whether it's leaseholds or working capital, you have to be able to identify that. And in typical places, working capital is maybe 2 years or a line of credit. But for the SBA, you can go up to 7 years. And then we have up to 10 years for business acquisition or equipment financing. Typical traditional financing is 7 years. And then we have 25 years for real estate. Then soft costs such as goodwill is also financed. And, franchise fees or closing costs, they're also eligible. You can roll that into your working capital, which makes a lot of sense for startups. And I think the last part of it is that it has to be guaranteed, or there's a guarantee portion of it. And that is going to lead me into what we did last year for one of the co-ops that we're working with right now. RL talked about the fact that all loans have to be guaranteed by the owner of the co-op or the business. This has been one of the greatest impediments to moving ahead or doing a business for food co-op. So how do you do that? The last co-op we did the loan for, the only co-op that we've been able to do the loan for, had over 1,200 members. Now, am I going to underwrite 1,200 members to a co-op? No. So we have to look for a way that we have to go around the personal guarantees or the guarantees of the owners. So we all came together and we said, the best thing for us to do is to look for an entity that will be also an owner of the co-op, and they will now guarantee the loan with some capital. So what Fredericksburg Food Co-op did was that they put 10%, or we asked them to put 10% of the loan amount into the entity, and we'll now have that entity to guarantee the loan. So for the sake of argument, if your total project is, let's say, 4 million or 3 million, you're looking for a loan of $1.5 million, 10% of that is $150,000. So you capitalize the entity with that amount, and we use that entity to guarantee the loan. So that was how we're able to get approval for Fredericksburg Food Co-op to be the first co-op to have an SBA guarantee last year.
And I would call that a workaround.
Yep.
They have two options at SBA: the personal guarantee, which does not work at all, or an entity can guarantee that loan. So we took that definition of an entity and we were able to create a workaround that the agency was able to accept, and how we move forward.
So we're all, there was a lot of back and forth. And they were circling it. First of all, we're what they call preferred lenders, which means we don't have to get approval from SBA when we book a loan. But so typical lenders that are not preferred lenders would have to send every loan to SBA for approval before they tell the borrower that they are approved. But we are preferred lenders. We can do it in-house and just let SBA know. But for this case, we had to send it to SBA, and there was a lot of back and forth. By the end of the day, just like RL said, there was a workaround, and it was approved January 17th, 2020.
And that would be the first food co-op loan ever made through the 57-year history of SBA. So that was a groundbreaking thing, and it's, you know, it's not ideal for us. It's not ideal for you. But if we have to do this structure where it either we do a loan or we don't do a loan from it, we're probably going to try to do the loan with the entity guarantee.
So I am going to suggest, because you've been hearing or you've been listening to RL and I for a little bit, Stuart, do you want us to answer a couple of questions before we talk about anything else, just in case people have questions?
Well, there's around the entity, there's a couple of questions. But what is that entity in terms of its structure? Is it a voting member of the co-op? Is it have how does it relate to the co-op?
The co-op is an LLC that is
The entity, or you mean not the co-op?
sorry, the entity.
Oh, right.
The entity was an LLC, and it was capitalized by the, I mean, it could be, so I don't know if I'm allowed to figure out how to say it here, but you could be, you know, innovative in the way that you capitalize the entity. I guess that's your other question, right? How do you capitalize it? It could be money from membership, or it could be there could be a way that we could roll, and we've not tried this, but we could roll the amount into the loan. We haven't tried that yet, but it's something that we're thinking about. Now it could just be members come together and say, we're going to do 10%, you know, and put the money there, or it could be monies that we could roll into the loan.
So it would, as a small group of existing members, put money into this LLC entity to become the guarantor?
Yes.
Is that it? Okay. And so it's their personal money?
It could be that, or it could be part of the money that has been raised from, so if you raised, like some co-ops can, if you raise a ton of money, then you can put that money into the entity.
Now, is that money actually set aside in escrow, or is it just guaranteed?
It's set aside.
It is set aside. So does it, they're theoretically drawing a little interest or whatever on?
Yep.
Okay. And is that entity, does it have any voting outside of the members that are part of the entity? The entity itself have any say in the co-op?
I am not totally sure about that. That might be a question for the co-op, but I don't think I'm not sure.
Okay, my assumption would be not, because unless they're structured as a limited cooperative association, it wouldn't be possible to have an outside investor with voting power. But
Let me jump in on this.
Yep.
An entity guarantee, we're talking about a federal agency with, I'm just going to make this number up, thousands of regulations, definitions, procedures. There's nothing to this. It's just an entity.
Yeah.
So we worked with this co-op. We made it up. They made it up. We figured it out. So what we're explaining here is a way we did it once. Is the agency expects to have skin in the game somehow from the co-op, whether that, and it has to be, I would assume, capital at some point. Maybe a foundation could be the entity that would guarantee your loan, or something else. But we just made this up, and they said, okay.
And what
So
percentage?
RL is absolutely correct there, because that was one of the things that we're kind of like stuck on, like what are we going to call the entity? What is the entity going to be like? And at the end of the day, we created this entity, and I mean, they created the entity and we went with it.
So it's safe to say that there isn't, at this point, there's clearly not just one way to do it, and everybody that's thinking about this can probably reinvent the wheel until we come up with a best practice. Is that up with, as long as they're with it?
Obviously, if you're going to talk to us about a loan, making sure that what you're doing, we're okay with and that we're comfortable with.
Right. Your lender would be critical, whether it's, yeah.
The other thing is the amount that we asked, that we, 10%. We're thinking to ourselves, like, could we have gotten away with 5 or 7.5 or 10? We these are things that we thought about, and at the end of the day, we came up with 10%, and it worked. So that's one of the things that we I don't want to say we got away with, but we went absolutely totally sure it was the right amount. But
since it was the first loan we've ever done like this, we want to make sure it was a well capitalized, well structured loan to make our argument.
Sure. Okay, thanks. There's some other detailed questions around the entity, but I think we might have covered them in the general response, and we'll have some more questions later in any case.
I would throw out that this is an opportunity. Dami is the lender. This is an opportunity for all of you to ask any type of basic lending questions or anything of that aspect. This is a great opportunity. Dami's here. Pick his brain, because this is what he does.
Do you want to take questions more now, or do you want to finish your presentation first and then go back to them?
I mean, we can take questions now, because the only other thing that I have left is just to talk about the structure, the detail. I'm not going to say detail, but the structure of the loan that we did. So
why don't you go ahead and do that, because that might answer some of the questions that are pending.
Just 1 minute.
Okay.
So what we did, like we said before, was we created the entity, and SBA. So what happens is we lend the money, and SBA says if you lose anything on it, we'll pay you 90% of it. At this time, it was 75%. This was pre-COVID. Because of COVID and the effect that COVID has had on the economy, they've bumped that up to 90% so they can spur the economy. But when we did this loan prior to COVID, it was 75%. And I want to also say that the proceeds of the loan need to be specific, and that would also dictate the terms and the collateral that we're going to use for the structure. But in this case, we did, it was for $1.4 million. There was a 10% guarantee by the entity. It was for typical, this would have been like 7 years, but we're able to do 144 months. The first 12 months of that was interest only, and then that will be followed by 132 months of principal plus interest. Sorry, principal and interest. So it's 120 month amortization. I think then one other thing that I need to talk about is the Sba Guarantee Fee. This is a good time to do the loans, because the fees have been waived. I think they've been waived for the next 6 months. Please don't quote me. I think that was the last thing I saw. But I think the fees have been waived for 6 months or thereabout. So if you do the loans right now, if you start the process and you're able to get the approval within 6 months, the fees will be waived. Now, some people will say, well, how much is the fees? That doesn't matter. It could be hefty. It could be up to 3%, 5%. It could be more than that. So this is a good time for you to be able to do the loan to get away with that, to get away from paying the fees. And then, typical collateral position. We are the senior lenders, so we are first. I was talking to, when I started this conversation, we're talking about FCI and NCG. FCI and NCG are very integral to what we do. They most of them work with, either the resources in the co-op sector, so like Columinate, NCG, FCI, and when we get the information, like I noticed when we started the conversation, Stuart put something of that Don Moffitt is going to do a pro forma conversation. When it comes from Don Moffitt, we have an idea of who it's coming from. We know what questions to ask. So that gives us some level of comfort that you're already talking to people in the sector. If you talk to, and I'm not saying the people that you might be talking to are not good enough, and I'm definitely not giving a shout out. I'm just trying to say that it helps us when we know where your numbers are coming from and you're working with people in the sector. So if you want to, you can, start talking to people like FCI or Columnate or NCG. And NCG, I must also say, NCG did not, prior to Fredericksburg, they were not accepting, and again, people on the line that are part of NCG, they can correct me, startups was not their strong sector to accept members, but Fredericksburg Food Co-op was accepted as an associate member, I think, and I think they might have been upgraded right now, but that was also a comforting thing because their products and their inventory will be coming from NCG. It's a good thing for us to know that. And I think the last thing I wanted to talk about was we got the cash collateral or the guarantee from the entity. The 150,000 is at the bank. It's earning interest, and it will be at the bank until such a time that we're comfortable with releasing the guarantee. Now that is not typical. Usually the guarantee is for the life of the loan, but again, we can go back and ask if that can be removed. One other thing I wanted to talk about is, and I don't need to go into the nitty-gritty of it now, for SBA loans, one of the things that you can take away as benefits is you don't have any covenants. We're not going to hold you to minimum debt service or minimum leverage loans, leverage tests. Secondly, there are no prepayment penalties. If it was a traditional or conventional loan, there might be a penalty if you prepay within the term of the loan. But with SBA loans, we don't have any of that. So that is one other benefit that you can add to the list that you might have written down. So if you have any questions on the structure, please let me know.
Dami, can you comment on this? Can you comment on, we're talking to startups on this call. How difficult is it for us to do startups without a SBA loan guarantee, or in general, just to kind of give everyone kind of an idea of it's an uphill challenge battle?
Thanks, RL. So it's an uphill battle, like RL said. And before Fredericksburg, again, internally and externally, doing Fredericksburg was tough. And this was despite the fact that they were able to raise, they were the highest number. Stuart, correct me if I'm wrong on this, but they raised the most money in time and also the amount that they raised in a very, very long time. Their local community was very supportive. Their numbers grew over 400 per year. They had all the things going for them, but then it was still difficult for them to get financing from us. And it is difficult to finance startups because, number one, they're startups, but number two, food co-ops have been challenging in the recent past, and everybody knows that. So there are two headwinds that we're facing here: the fact that it's a startup and the second fact that it's a co-op. So it's been hard for us to do startups. But with SBA, you have a better chance of getting the loan done with the SBA.
All right, are you ready for a few questions? I'll take that for a yes.
We're ready.
Yeah, I will say Karen Zimmelman, who from NCB or NCG, excuse me, was on the call, but she had to leave early for another meeting. And I can answer in part about where NCG is now and its relationship with startups. They are admitting strong startups before they open in much more frequently. And they're also admitting new co-ops after they open earlier than they did in the past. They have a renewed commitment to working more with startups. And I don't know if there's exact parameters on what it takes to be considered, but for those of you that are in stage 3, you should be talking to them definitely about when and if it's appropriate for you to apply for membership. So, okay, a couple of other questions. Is the rate for the SBA loan what was Fredericksburg able to get, if you can share that?
So I'm not sure if I'm able to share that. I'm not sure if it's.
Could we just say whether it was below market rate or at market rate?
It was very competitive. It was actually, let me even explain that. It was, so we went out at a higher rate because it was pre-COVID, and when COVID hit, I mean, everybody was like, hey, dude, rates are cheaper right now. The loan is not closed. Can you do something for us? So we went back to SBA and were able to knock off 100 basis points. So, we are on your side. we will be profitable, but at the same time, it was competitive.
Yeah. Okay.
I'm sorry. I don't know if I'm meant to share their rate. So.
Yeah. No. That's why I said if you can. I understand that. Does it make any difference? You said something about the credit has to be unavailable from other sources, and most co-ops have a whole package of financing, including member equity, maybe either member loans or preferred shares. Would those interfere with the potential for being able to get that whatever they still need in an SBA loan guarantee?
So, what I meant by credit elsewhere, thank you for that question, Stuart. What I meant by credit elsewhere is most of the time what we come in to do is to finance the gap, okay? So you have member loans, member equity, grants, everything that you can come up with, and then there will be a difference between what you've been able to raise and what the cost of the project is. That is where we come in. We like to also see that there are other sources of financing in the capital stack. We don't like to be the only ones. At the end of the day, when we complete this loan, when we fully fund it, as you all know, well, maybe you don't know, but the loan is not fully funded right now because Fredericksburg is still completing their building. But when it's fully funded, I'm going to most likely share it with some of the other CDFIs, which is what we do. We like to have other members or other sources of funding.
Yeah. Is there a size minimum maximum limit for SBA guarantees?
No, all co-ops will. I think it's 5 million for 7A, but all co-ops at this point will be eligible.
That's great. And for co-ops that are thinking about this, how early should they start talking to somebody at NCB if they're interested in pursuing a loan through you, and with or without SBA, I guess, but if it makes any, or does it make a difference? If they're looking at an SBA loan guarantee, is the answer different?
So if you're a startup, I will say you should consider SBA guarantee. Again, we are lending you the money, but SBA is just guaranteeing it. and hopefully we don't need the guarantee. But it reassures everybody that you're interested in doing this and you're able to do it. So I would say please look into getting the guarantee if you're a startup. Secondly, I would say Fredericksburg, I started talking to them 3 years or 4 years before they opened.
Oh boy.
So I mean, it again, we meet at different places. That's why first of all, they're in Virginia. We're in Virginia. Rich, who's the chairman of the board, was involved in a lot of co-op things. So we met at different functions, and the opportunity to talk about the project was there. But I would also say that you should start talking as soon as possible. These loans take a while. So and then NCB has a pipeline that we're working on already. So you'll be added to the pipeline. So there are two things here: your work on one side, and then NCB's work, and then how we can merge it. I would say as early as possible. I mean, you can just call in and say, "Hey, we're thinking of starting a food co-op, and we're only 300 members." And I'll say, "Well, nice to meet you," and I'll put your name down, but I'll say, "Talk to you next year." But at least I know your name. I have your number. I have the name of the company or the co-op. We can talk about it anytime. When I see you at Up and Coming, we can talk. So, I mean, that as early as possible.
And as Dami just mentioned offhand, he's often or usually these days at our Up and Coming conferences where you can talk to him in person. RL, I think, has been to at least one. And although this year it's virtual, we will have some opportunities for conversations on the side. So those questions are coming right in. So moving on, does it make any difference if you're leasing or purchasing your site?
No,
Okay, that's
it
easy.
doesn't. But I would I would advise that again, I'm sure there might be people that are advising you and they occupy that space as your consultants, but I would suggest that you lease first, before you buy. And there are just complications when you're buying, because there's another SBA program called the 504 that might come into play, and I would just say lease. And
some of these groups have already committed to a purchase site or even have made the purchase. So, while that's great for earlier in the process, they may be stuck in that choice at this point. But we've often given advice that a primary bank loan is only going to be 20 to 30% of the total startup budget that the bank is probably going to be willing to finance based on collateral and other issues. If you have an SBA loan guarantee, does that change that? Can you borrow a greater portion of your total capital?
That changes that, but not by much. We're still willing to, we still like to see sub debt, other skin in the game, but if we're getting a guarantee for 90% or even 75%, we can go a little higher. I don't think RL, you can correct me if I'm wrong, but I don't see where we've gone over 45 or 50% in the startup.
No, but that gives me a little idea that I learned from joining and working at the bank. Just because the bank has a guarantee doesn't mean that the lenders are going to make a bad loan. You got to have everything. You're going to have everything in order, just like it would a traditional loan. I always kind of thought in the back of my mind, oh, well, we'll take a bigger risk, or we'll roll the dice on a loose application. But it's been very clear to me from the lenders that it's got to be a thorough loan along with the guarantee.
Dami, does NCB do 504s as well as the 7A?
Yes, we do.
Okay. Couple of questions around your comment about lenders in a stack or including other secondary lenders in the program. People want more information about what do you mean by that? Should they be finding those lender relationships? Or are you talking about just something you do with the loan after it's settled?
No, it depends. So there is a way that you're going to come up, excuse me, there's a way you're going to come up with your capital, right? So you're going to have member equity, which is the amount that you pay into the co-op. So typically $100, $200, $300. Then there's going to be member loans, right? So the loans that you're able to generate from your capital, from your loan campaign. Then there are grants and opportunities from whoever is in your neighborhood, or I mean, however you can come up with it. And I'm putting that into the grant bucket. So Fredericksburg was able to do maybe about 5% of the capital stock from grants, so maybe a little less than that. So that is good. You can also do that. Then we work with other CDFIs, CFNE, Shared Capital, Leaf, that can come in and also say, hey, listen, we will take a sub position while you be the senior debt. You know, maybe they don't do that as much now, but we like to see that. And sometimes when we finish the loan, and this is Fredericksburg's case, I might participate with other sub-debt providers. So what I meant by the capital stack is the different sources of capital to fund the project.
Okay. Well, we got time for just like one or two more, depending on how extensive the answers turn out to be. Who's here from Clipper City? I'm not quite sure if I fully understand your questions, but if you'd like to unmute and ask it directly, that would be great.
Sure. I just have a question real quick about when you're qualifying for an SBA loan and you're a startup, are you expecting to see active income when you're figuring out debt service? Or obviously most of us are getting funds from fundraising sorts of endeavors. What are you guys looking for qualification of that?
So thank you for that question. And I think I made a little bit of a mention of it earlier on. We're looking for a strong pro forma done or performed by someone that knows what they're doing. So that was why I talked about Don Moffett and Colluminate working with co-ops. When those pro formas come to us, we're able to trust the numbers a little bit more. What we do is we go into the pro forma and discount what you've given us, but we don't expect you to make money while you're not selling groceries. So we expect that the second year or the first year, SBA expects you to have a minimum debt service of 1.15. So in essence, if you owe $100, you're able to come up with cash flow of $115. And I think for the COVID, I think they've moved that to the second year. So not just, so the first year is fine, but the second year you have to meet a minimum of 1.15.
I would just say too, that these are questions that are going to be a little different for each co-op based on how you've raised money and what your expenses are. Something to talk to your banker about, and whoever is doing your pro forma for sure can help answer some of those questions. We are running at the last minute here, so I'm just going to wrap things up quick. Thank you so much, Dami and RL. This has been very informative. And as I said before, it will be recorded. We've got lots more in the series coming up and hope to see all of you again soon. Thank you, everybody.
Thank you, guys. I just put my email address in the chat box in case anybody has questions. And please feel free to call myself or RL RL, you want to put your information in chat too?
Yeah, well, thanks everyone. I really
you, guys.
appreciate it. Go co-ops.
Go co-ops. Thanks, Stuart.
Thank you. Really
Talk to you
appreciate
later.
it.
Yeah.
Yeah, take good care.